Welcome to CNBC TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines, and what a day it was for the bulls. I'm Sonia Shenoy, and these are all the top headlines that we're tracking for today. The bulls bounce back on the Lao Street. Sensex gains over 1,500 points. The Nifty gains over 400 points. All sectoral indices and all Nifty stocks end in the green. The rupee gains more than 50 paise against the dollar. Experts and analysts see the O2C capex as a big bet on the India growth story and see this along with the 5G rollout, the green initiatives and the big retail expansion driving growth and delivering returns to shareholders. And Narayana Rudalya tells CNBC TV18 it will look at building and buying hospitals to add capacity, even as KIMS closes a deal for the Nagpur hospital. Analysts turn positive on the sector and negative on pharma. And consumer durable players tell CNBC TV18 the Independence Day week was the best for sales in many years, and the outlook is upbeat for the festive season driven by the premium segment, but the mass segment remains weak. And a JP Morgan report says disbursements have picked up for auto financiers as pent-up demand returns after 4 years. Ashok Leyland rallies 4% after it launches 2 new variants of its popular LCV range, Bada Dost. And here's the lineup of what we have in store for you today. It's a packed show. In Market Opinion, we have Sanjeev Prasad, Managing Director of Kotak Institutional Equities. In Corporate Voices, we have Rajat Gupta of Ashok Leyland. All right, but what a day it was on Dalal Street. The bulls bounced back, and how? Yesterday there was a sell-off, but today the bulls took it away in style. The Sensex gained over 1,500 points. The Nifty gained more than 300 points thanks to a strong global sentiment. All sectoral indices ended in the green today, and all the 50 Nifty stocks posted gains for the day. In fact, the Bajaj twins, the auto stocks, Reliance Industries, Ashok Leyland were really the big gainers today. Anuj is here with the day's market wrap. Anuj.
Stunning day for the market. Nobody could have thought that, we will do this kind of market action today. The SGX Nifty was indicating that we'll have a gap up. But the market opened much better than that and then kept building pace through the day. There was not a single intraday dip today. The Nifty was up over 2.5%. The Bank Nifty was up nearly 3.5%. And most of this was domestic in nature because globally there was no signal of something like this from either the US market futures or the Asian markets. The broader market has been very strong. So the big question is this start of something big? We'll find out. Quickly, let me run through the big gainers. Across the board, there were gainers, but financials stood out, whether it was names like Bajaj Finserv, Bajaj Finance or IndusInd Bank. But the real impetus came from the big ones, SBI, Kotak, the HDFC twins, ICICI Bank, and of course, others as well. On the gaining side, some of the other names which did well, Tech Mahindra, the Tata Group stocks, Tata Motors, Tata Steel, Titan, Maruti did well, Larsen did well, Infosys did well. As I said, today it was, almost like hitting a dart and, throwing a dart and it would hit a winner. The big question is this start of something big? We'll find out.
All right, Anuj, thanks a lot for that. So the bulls started the festive season in style. Let's get you some expert opinion now. Rana Gupta, who is the Senior Portfolio Manager and India Equity Specialist at Manulife Investment Management, said that the US interest rates cannot be ignored in a globalized world. He also adds that he remains positive on India in the long run. Listen in.
In this globalized world, we cannot ignore the US interest rates. This kind of outlook where the rates are getting higher, not just US Fed, but other central bankers becoming more hawkish, geopolitical scenario uncertain, and also, there is this increasing risk of, inflation and all of it. Around this time, to get into the stock market, you need supportive valuation. Coming to India, the top line growth will be good. So even with margins lower than expected, the absolute profit delivered is still good. So earning cuts will be lower. I think the longer term India, positive argument that we have been talking about for a long time now, led by digital economy, manufacturing, and now increasingly we are seeing pace of infrastructure improvement and all of it, that stays.
Okay, that's the word coming in from Manulife. In more opinions, Sanjeev Prasad of Kotak Institutional Equities says that the valuations on financials and banks are more reasonable than other stocks in the Indian market. He also discussed his outlook for the auto sector. Take a look.
Again, financials is something where valuations have been more reasonable compared to other growth quality stocks in the market. You look at HDFC Bank after the merger with HDFC, again adjusted for the value of its investment in various subsidiaries. It is available about 2.2 times FY24 basis. So I think banks, at least the tier 1 banks, still have reasonable scope for re-rating. Actually, we are somewhat negative on the auto space. More on the OEMs, I would say, they're pretty okay on the component names. If you look at the financial returns which the incumbents make, that is very, very high. So I think this is a sector which is ripe for disruption. Growth is slowing down. So I don't know whether I want to pay such high valuations for this kind of growth profile, probably declining return profile.
All right, that's about the market action. But on to the second headline now. Reliance gained 1% after the company's 45th AGM took place yesterday. Most brokerages have raised their target prices and, in fact, have target prices higher than the current market price. So let's take a quick look at them. UBS, Jefferies, Goldman Sachs, Citi and CLSA all have a buy. And target prices are anywhere between 2,800 all the way to 3,225. Now, the big takeaway, as we know, is that Reliance Jio will be launching the 5G network, the largest 5G network, by Diwali this year. In fact, there'll be a pan-India 5G coverage by the year 2023, that's next year. And for this, they will make an investment of 2 lakh crores for the complete rollout. Apart from that, the interesting bit was that Reliance will be launching the FMCG business this year, and that will, of course, be under the retail umbrella. They will also be investing 75,000 crores in the oil-to-chemical business over the next 5 years. And all of this will help Reliance Industries double their value by 2027. A couple of other key highlights included the fact that they will be launching JioMart into WhatsApp through the WhatsApp chat interface. They are working with Google to develop a smartphone as well, an affordable 5G smartphone. But most important from a corporate governance point of view is that a succession plan is now firmly in place. Akash Ambani will be leading Jio, Isha Ambani will be leading retail, and Anant Ambani will be heading the new energy vertical. And this succession plan and clarity on the future course of leadership is something that the street took with both hands. Well, that's on Reliance Industries. Of course, standard disclaimer, Reliance Industries is the owner of the channel that you're watching. But the third headline today, Nifty Pharma Index ended over 1% higher. Let's take a look at how the healthcare and pharma space fared in Q1 of FY23. Ekta is here with all the details. Ekta.
Well, yes, Q1 FY23 threw up some interesting trends in the pharma and the healthcare space. While healthcare companies such as hospitals did meet expectations, the India generic companies' performance was weak. In fact, Jefferies in their note points out that the largest miss in Q1 FY23 was from pharma companies, primarily on account of US price erosion. The US pressure in the markets combined with factors such as higher raw material costs resulted in margins being weighed down in Q1. Companies such as Lupin, Alembic and Alchem reported some of the lowest margins ever in the quarter gone by. On the other hand, hospitals within the healthcare segment met analyst expectations. Factors such as occupancies normalizing, price hikes, higher surgical and payer mix, international flights resuming resulted in parameters such as the average revenue per occupied bed, hence margins improving. In fact, hospitals on an average saw high single to double digit sales growth and 200 to 350 basis points margin improvement sequentially. So is this dichotomy in the performance expected to continue? For hospitals, analysts point out the outlook is likely to remain healthy due to factors such as occupancies looking to rise going forward, also along with the case mix and the payer profiles improving further. While for generic pharma companies, recovery is possible only in the next 1 to 2 quarters or 1 to 2 quarters away. So is the preference shifting? For some, yes. Jefferies' pecking order now is hospitals, followed by contract drug manufacturing companies, and finally, generic companies. Similarly, a healthcare fund manager says their preference is in all domestic focused stories, from hospitals and diagnostics to API companies, which could benefit from the China +1 factor. And yes, while US generic companies are likely to continue facing headwinds such as price pressure, input cost inflation to risks from the US FDA's inspections or litigations, the advice from some is not to entirely avoid the play, but to be selective. HSBC, for example, likes pharma companies that, according to them, are moving up the value chain and have near to medium-term drivers. They like stocks such as Cipla due to their pipeline of US launches, and Sun Pharma, which is on improving profitability in their specialty product sales. Lastly, while healthcare companies might be emerging as a preference, it is important to highlight the risks. Diagnostic companies, which are a healthcare play, are seeing stiff competition, which is pulling down margins. An example was Fortis's margins being pulled lower due to their pathology arm in Q1. Similarly, investments in new verticals, for example, Apollo Hospitals, increased their 24/7 investments, leading to EBITDA loss in the division. A strategic investor, a scale-up of the arm will be a key factor to watch going forward.
Okay, thanks for that report card on the pharmaceutical space, Ekta. Meanwhile, Narayana Ridulya told CNBC TV18 that it will look at building and buying more hospitals to add capacity, even as KIMS closed a deal for the Nagpur hospital. Take a look.
Most of the units are our own, except one unit in Kondapur. There also we are planning to shift, as we mentioned before. So the reason is we always believe to have our own so that it will be in a long run, it will give good ROCE and also the good return of investments for everyone. Acquired the last couple of quarters back, Sunshine, and then this is the Nagpur. What will happen in the beginning of any acquisition, we need to add more consultants. It is going to cost for the organization. Definitely there is a growth in the existing, apart from these acquisitions, there is a single digit growth will be there in our KIMS consolidated one, about 3,000 beds. And these beds may not able to contribute in the next 1 or 2 quarters of this financial year. The next year will definitely contribute a reasonable good growth of double digits.
So we definitely have a stated intent that we will be doing some inorganic play, especially in our Bangalore and Calcutta markets. It can be either brownfield or we could do a greenfield option as well, buy land and build. We do want to expand in Bangalore and Calcutta and in some of our, and where our return on capital is higher in terms of other markets, we will make strategic investments. So that is on the cards, but I don't think I'm in a position to share any of the work that is currently happening for obvious reasons. But definitely we have a stated intent that we will expand because we are almost nearing capacity in some of our flagship hospitals. We need more capacity, so we will build as well as we will, look at some inorganic play.
Welcome back. You're still with us on Markets Today. Let's go across to the rest of the headlines that we're tracking for you. The fourth headline today, consumer durable players told CNBC TV18 that the Independence Day week was the best for sales in many years and the outlook is upbeat for the festive season, driven by the premium segment. But the mass market segment sales remain quite weak. Listen in.
In the last 3 months, I would say post 15th of May or second half of May. So clearly, because of the inflationary trend, we are seeing the mass segment demand going down. It is actually degrowing over last year significantly. And the degrowth is to the extent of anywhere between 18 to 20%. Whereas if you look at the premium segment, which is inelastic to this inflationary trend, there we are clearly seeing growth and across markets and across categories. And the growth is as high as 30% plus. See spikes in the mass segment also during the Independence Week. Onam is also an indicator, and between 1st and 8th, we are expecting a spike in demand in Onam also. So similar can be expected in Dussehra and Diwali.
This year is going to be one of the very good years for consumer durable industries overall, because what we saw on 15th August also, it was one of the best weekend, I would say, which we have seen in the last 4-5 years. And I think primarily the reason is basically because COVID is behind us. Economy is looking up. There's a lot of buzz in a lot of areas, industry specific, where I think salaries are going high, hitting the roof. So overall, it's a positive sentiment. And this year, I think the demand is going to be there across all the segments.
Okay, very strong demand across consumer durables. But let's move on. The fifth headline today, a JP Morgan report says that disbursements have picked up for auto financiers as pent-up demand returns after 4 long years. And we saw it with stocks like Bajaj Finance being the biggest gainers today. Abhishek Kothari is here with all the details. Abhishek.
Well, JP Morgan has written a note on auto finances wherein they say that, the disbursements are picking up as pent-up demand has returned. So they say that higher industrial activity as well as rural recovery and positive property cycle could drive the disbursements growth going ahead. They say that, major auto finances have seen a loan growth of around 7% per annum over the last 3 years, which compares to a 17% CAGR in growth that they saw between FY11 to FY19. They say that higher crude price could affect the operators' profitability. However, banks appear to be better placed in protecting margins as well as capturing a market share in this cycle. So they say that they expect a stock rotation in terms of YTD performance that has been seen so far. They are underweight on Chola as well as MMFSL, while they remain neutral on Shriram Transport and overweight rating on IndusInd Bank. So they expect growth and ROE differential to narrow in spaces, which should also lead to narrow in the valuation gap that is there between NBFCs and the bank. Back to you.
All right, Abhishek, thanks a lot for that. Well, the auto finances are lending to the auto OEMs, so let's talk about that. Ashok Leyland gained 4% after it launched 2 new variants of its popular light commercial vehicle range, Bada Dost, as it looks to expand the LCV portfolio and gain market share. The management was actually very bullish on the channel. He did say that there is good growth that they're seeing in the light commercial vehicle segment. Currently, they enjoy 20% market share and they're looking to gain about 4-5% over the next 1 to 2 years. They expect the industry itself to grow by 16% in FY23, and they say that demand is very strong, not just because of a pickup in infrastructure, but because of the rising demand from logistics and e-commerce segment. They expect a 10 to 12% compounded annual growth for the LCV industry over the next few years. In fact, listen into what the management had to say.
TIV growth is beyond our expectation. We expected TIV to grow at about 10 to 12%, but actually post-COVID, I am seeing a huge growth, which is growing at about 16 to 18%. So I am expecting that the year end would be around 16% growth in TIV segment, which is much better than pre-COVID levels. Market share is about 20.3% in LCV 2 to 3.5 ton segment. And of course, the launches will add to it. For LCV, we are targeting about 24 to 25% share, and industry would go at around 16% this year. And CAGR of next 3 to 5 years would be around 10 to 12%.
Okay, well, that's it from a lot of the stock action. But let's move on and tell you what else is happening in the financial markets. Legendary investor Warren Buffett turns 92 today. Prashant Nair is here with some interesting facts about the Oracle of Omaha. Prashant, over to you.
The Oracle of Omaha is 92. So here's wishing Mr. Buffett a very happy birthday from all of us here at CNBC-TV18. It's impossible to do justice to the legacy and what he's accomplished in his 92 years in a 90-second piece. The easiest thing, which is what I'm going to do, is just pick out the stats. Right? I mean, what has he done in terms of making money? Net worth at $100 billion, all data sourced, of course, from Bloomberg. And that's quite something. Where does that $100 billion get him in the rich list? At number 6 globally. In his industry, which is fund management, at number 1. The fact that he's made all this money without running a business, but purely by investing over decades, is an accomplishment all in itself. The $100 billion is about 5% if you added the top 20 billionaires and their wealth. 2.5%, 1.9 and 1.4 respectively here. So the numbers are truly staggering. How much is Mr. Buffett's wealth is measured by various things? And this is data pulled quite helpfully by my colleague Yusuf. So in gold, this is what it amounts to. In crude oil, which of course is nowadays a very volatile commodity, it's about 957 million barrels. In terms of US GDP, in terms of Indian GDP, as I said, very, very large numbers. If Mr. Buffett himself were a company listed on the S&P 500, he would be ranked 77. No mention of Mr. Buffett, of course, is complete without his longtime pal, partner, a co-investor, Charlie Munger. And of course, I mean, both of these have given so much to the world of investing. While I put out the stats and they're easy to rattle off, I think the real impact they've had on teaching investors how to look at a business, treating it as a business and not a stock price which moves up and down daily, I think that's been invaluable. Things like greed and fear, how to take both, and of course treating and trying to buy a company at reasonable valuations and holding it forever. I mean, absolutely fantastic impact on investor psyche all around the world, here in India included. So just to wrap it up, here's wishing Mr. Buffett once again a very happy birthday.
Okay, what a great life. And at this point in time, still known as the greatest investor in the world, despite being 92 years old. That's Warren Buffett for you. But with that, it's a wrap on this edition of Markets Today. Thanks a lot for watching.